Hi friends, my name is Rohan Bharachandra. In stock markets, there are two ways to invest. One is long term and the second one is short term. These two are separate compartments and different ways of making money from stock market. Long term means investing for 10 to 20 to 30 years for children education, children marriage, house construction, retirement, etc. Short term is investing for a few days to few months to make some additional income for covering basic expenses and to improve the standard of living such as buying a mobile, vacations, good clothes, expensive restaurants, etc. For long term, you need to do fundamental analysis and select 6 to 10 companies and invest regularly every month for as long as possible and monitor the stocks regularly. For short term, you need to do technical analysis and based on the indications, you need to buy and sell stocks. For this, you need to have some indicators to know when to buy and sell. In this video, we are going to cover 5 commonly used technical indicators so that based on this, you can do further research. Number 1 is simple moving averages. This is one of the simplest indicators investors can use for short-term indications. Moving averages can be calculated for various time periods such as 15, 20, 30 days or even 21 days. We use and teach our students in our online stock market basic course about how to use 30 days moving average to make profits in short term. I have put the graph showing the 30 days moving average. The red line is called the 30 days moving average. Blue line is the actual share price of whatever company you are seeing, and you can see the indications are coming. You need to understand when to buy and when to sell, and based on that you need to practice for short term. Indicator number 2, exponential moving averages. This is also very similar to simple moving averages except that EMA gives more weightage for recent prices compared to old prices. So this is slightly technical in understanding what is weightage, but the graph is almost similar to simple moving averages and it is calculated. You need not do the calculation, you just need to interpret how the graph is and when to buy and when to sell. In simple moving averages, all the prices are added and divided by the number of days, so it is very simple, but exponential moving averages is slightly more complicated. Third indicator is relative strength index. This is also very commonly referred to as RSI. Many investors use RSI to guide them on when to buy and when to sell for short term. RSI is a figure between 0 and 100. RSI rising above 50 is considered an uptrend and RSI falling below 50 is considered a downtrend. Above 70 is called overbought zone since it has moved up a lot. Similarly, RSI below 30 is called oversold zone. Sometimes investors use also 60 and 40, where 60 is the overbought zone, 40 is the oversold zone. So different variations can be done depending on what is comfortable to you. When the RSI for a stock is above 70, it means that there is high chance of the trend reversing and price falling. When the RSI for a stock is below 70, it means there is a high chance that the price may rise from that point. I have given the sample graph of RSI. You can see the RSI is at the bottom and I have put 30 and 70 lines. When it is going from below and rising, that is the time you need to buy, and when it is above 70, there is a high chance that the stock price may fall in a few days. Today evening 9:15 on Dr. Bharachandra Institute Kannada channel, we have a live question answer session for all channel members. So type your questions between 9 and 9:15 so that we can answer your questions. Fourth indicator is called stochastic oscillator. It is similar to RSI except that there are two lines at the bottom. In RSI you can see there was only one line. In stochastic oscillator, one line is the value of the indicator and the other is a 3-day moving average of the stock price. Above 80 is called overbought zone since it has moved up a lot. Similarly, stochastic oscillator below 20 is called oversold zone. I have put the graph of stochastic oscillator. You can see there the red line at the bottom is the 3 days moving average of the stock and the blue line is the stochastic oscillator, and you can see the 80 level line and 20 level line, and if it is near 20 that means it is the oversold zone. Point number 5, ease of movement. Ease of movement is an indicator that indicates relationship between the rate of change in a stock price with its volume. Usually it is said when a stock price is rising and it has high volume, that means the trend is very strong and maybe the rise will be higher for the stock. Similarly, when the stock price is falling and the volume is also high, that means there is a high chance that the stock price may fall further. This indicator is plotted on a chart with 0 as a baseline. When it rises above 0, that it means that the stock price is rising easily, and when there is a further ease of movement rise, the more easily the price will rise. As ease of movement falls below 0, then it indicates that the market is falling with increasing ease. I have put the graph. You can see the line at the bottom, which is the green color line. Whenever it is 0 and rising, that means the stock price also usually rises, and when it is in negative and it is falling, that means that the stock price also is likely to fall. So you can use this in conjunction with simple moving averages or any other indicator to get an idea when we need to buy or sell. Whichever indicator you use, you should be able to learn and master it well. There is no point in knowing multiple indicators and not being a master of anything, because then you are unlikely to use it effectively. There are hundreds of technical analysis indicators. All of them have their own advantages and disadvantages. You need to decide which ones you would like to use to make profits in the short term. If you like this video, please click the like button and mention in the comment section which indicator do you use for buying and selling for short term trades. You can type in the comment section. Thank you for watching this video. Bye bye and all the best.